Hi, good afternoon, everyone. I also want to start by acknowledging the traditional custodians of the land on which we meet today, and I pay my respect to elders past and present. So I'm Sherman Chan, Chief Economist of Business New South Wales, and I just want to remind you of that because I will be talking a lot about economics. So in my presentation, I just want to start by giving you an of our economic recovery to date and the implications that has for the labour market. And I'll also highlight some key challenges ahead and also opportunities for us to address some of the labour market issues that we will be discussing today. So now let's start with the economy. Okay, so this chart shows you the GDP numbers. The blue bars are the quarter-on-quarter growth, and the red line shows you the year-on-year economic growth. So what this graph clearly shows us is that prior to the pandemic, as you can see on the left-hand side, economic growth was relatively stable from quarter to quarter. The pandemic has introduced a lot of volatility to our economy. And as you can see, there were sharp declines in the June quarter of 2020 and the September quarter of 2021. And I'm very sure all of you know the reason why. So they were the periods when we had our lockdowns and when we had our trading restrictions. And I think when you look at a graph like that, it's very easy for you to focus on the negatives. But what I want to highlight today is that when I look at the bigger picture here, I actually see some positive observations. So first, I want you to actually look at the rebounds that we have recorded following these sharp declines. The rebounds are actually pretty sharp compared to historical growth numbers. So what it tells us is that there is very strong underlying demand within our economy, particularly from the consumer sector. And this is a very encouraging sign. And another thing I want to highlight is actually the latest set of GDP data. So if you look at the furthest right, so this is the March quarter of 2022. So if you all recall, that was when we experienced our Omicron outbreak. A lot of people looked at the trends prior to that, and they expected an economic contraction in the first quarter of this year. And guess what? We avoided a contraction. Instead, we actually recorded pretty healthy GDP growth. So that, again, to me, is an encouraging sign about our economy, about the underlying strength. Is this okay, good. Okay, so to better understand the performance of our economy, this chart shows you the breakdown of the different components that contribute to economic growth. So the key components are household consumption, government expenditure, public investment, private investment, and net exports. So bear in mind that these components don't have an equal share of GDP. So for advanced economies like Australia, household consumption accounts for over 50% of GDP, and this is pretty common. So when household spending is strong, our economy tends to stay in a good shape, and vice versa. And this graph also shows you how restricted household spending during those lockdowns actually dragged on our overall economic performance, and also how a rebound in household spending helped with our economic recovery. Okay, so far we've looked at the Australian economy as a whole. So this slide shows you how the New South Wales economy has done. So you may be thinking that New South Wales has followed a similar path as the national GDP results. This is true, but one thing I do want to point out is that New South Wales has experienced much sharper declines and rebounds. So in other words, the ups and downs have been amplified. And this is in part attributed to, again, household consumption because we have a pretty strong service sector within our state. Okay. So the strength of the economy is also reflected in the labour market. What is worth bearing in mind is that employment drives consumption. Consumption drives economic growth. And economic growth in turn creates jobs. So the interconnectedness here is why I wanted to talk to you about consumption whilst we're discussing the labour market here today, because they're all connected. But coming back to the unemployment rate, it has been trending downward since mid-2020, as you can see. The national unemployment rate has been at 3.9% since March this year, and I'm sure a lot of you know that this is a record low level. This is basically the lowest level since the monthly records began in 1978. And the New South Wales unemployment rate has a similar trend. And the recent tightening of the labour market has actually benefited our young people as well. So prior to the pandemic, the national youth unemployment rate had traditionally been in double digits. But even this data series has shown improvement, a downward trend since mid-2020, and it is now in single digit. Again, New South Wales follows a pretty similar trend here compared to the national figures. So just another chart to show you how strong the labour market has been. So this is about the underemployment rate. It captures people who want to work more hours than they're currently doing. So this data series had been relatively stable in the 5 years prior to the pandemic. There was a spike when COVID hit, and I think that was when people were sitting at home hoping to do more hours at work. But since then, there has been a downward trend as well. It has now fallen to a level that is far lower than the average of the past 10 years. What this means is that people are happy with the hours of work that they are currently doing. So people aren't just placed into work for the sake of having 1 or 2 hours of work. People are actually happy with what they're doing. So now the job vacancy rate is another labour market indicator that I like to follow. It captures the proportion of available jobs that are currently unfilled. So to me, the vacancy rate is sort of like the opposite of the unemployment rate. When you talk about the unemployment rate, it captures the people who want to work but can't find work. But the vacancy rate tells you about the jobs that are available, but they can't find people to fill them. So with the vacancy rate also trending up in the last couple of years, it is a clear indication that there is increasing unmet demand for workers out there in our economy. And there is no doubt, this is no doubt a concerning picture from businesses' perspective because, well, especially for those already experiencing worker shortages, because you can see that vacancy rate is still trending up. Okay, so now that we've looked at the challenges in the labour market, I just want to show you other challenges that businesses face that will sooner or later change their operational priorities, which may also have implications for the demand for workers as well. So inflation is no doubt one of the biggest business challenges right now. When people talk about inflation, people tend to refer to the consumer price index. But for economists like to think a step in advance. So you look at the producer price index, which is a leading indicator. It tells you what to expect at the retail level in a few months' time. So if you look at the red line, which is the producer price index for manufacturing, it hit an alarming 18.5% year-on-year growth rate in the March quarter. And more concerning is that it has been on a strong upward trend, and there are no signs of it slowing down anytime yet. Especially, we know that we're still dealing with global supply chain issues, which is limiting supply. And at the same time, with people, consumer confidence has been improving as we emerge from the pandemic, or people get used to the new normal. So there is an increase in demand as well. So basically, we are seeing inflationary pressures from both supply and demand sides. And of course, on top of that, we all know that one of the latest concerns is with energy prices. So that's probably still have some way to go, and that is going to add to business cost as well. So with factory prices still rising so quickly, we certainly have not seen the peak of inflation. I think that's one thing that everyone would agree on. And what this means from an economic perspective is that strong inflation is going to hurt household real income because people's spending power will be weakened. And then we will see a subsequent dampening effect on consumption. So when prices become higher, people actually cannot consume as much if their wages don't catch up to the same rate. So on the topic of inflation, I just want to share some unique findings with you. As Dave mentioned earlier, our team runs a quarterly business condition survey on our New South Wales-based members. So members are asked about their views on the performance of the economy, and every time we include a special topic to capture some of their most pressing concerns at that point in time. So the last one was done in late April to early May, and we we asked them a series of questions about how they were dealing with the cost of doing business and inflation issues. So the responses we received have come from a good mix of industry sectors. We have learned that operational cost pressures have increased, and we have also been able to gauge how businesses have been coping with inflationary pressures. And the results are shown on this slide. So I just want to draw your attention to the bottom row, actually. So no changes made to the business. So overall, we have 3% of respondents saying that they have not had to make any changes to their business due to inflation. For the Hunter region, this figure is 4%, which is also very low. What this means is that a lot of other businesses out there have had to make changes because of price increases. So what are the changes they have implemented? The most common approaches are to reduce their profit margin or raise prices. So as you all know, reducing profit margin basically means that businesses are footing and raising prices is when you try to pass that on to consumers. And we also know that a lot of companies actually choose a combination of both by sharing with their customers. But for your region, I have to highlight, you have definitely done better than the state average, because if you look at the top two bars here, more businesses have avoided raising prices or cutting their own profit margin. And what have they done? What they have considered are other options. So for example, changing their operations and also adapting to the higher prices, perhaps by introducing new services and introducing the production methods, etc. But having said that, I still want to point out that over a quarter of respondents still had to borrow money to maintain their business, and this is concerning. And also, there is a certain proportion of respondents who had to even temporarily close their business because of the higher costs. So what is the overall level of business confidence? Because that's what our survey always tries to gauge. The table here shows you the business confidence index computed by our team. The index goes from minus 100 to positive 100. So minus 100 is when every respondent is feeling downbeat about the outlook, and positive 100 is when everyone's feeling upbeat about the outlook. So where is confidence at right now? For the state, minus 31, and for the Hunter region, minus 21. So essentially, the business confidence index remains in negative territory, meaning that businesses are still very cautious about the economic outlook. And apart from the business confidence index, I want to show you a set of business conditions measures that we have also captured, and they are presented here towards the right-hand side. So for the measure of capital spending, staff numbers, sales revenue and profit, we want them to be positive as well, just like the business confidence index. But unfortunately, the results tell us that businesses are still very pessimistic about sales revenue and therefore profits, and that also relates to their hiring intentions and also capital spending intentions as well. So this table, when I present this table, normally you see a lot of red and green cells. So I use red to highlight the performances that are below state average, and green are the ones that are above state average. So I think one positive observation for this audience today is that businesses in the Hunter region are less pessimistic than the state average across all of these measures. Okay, so another challenge here. So by now I think we all know that the Reserve Bank of Australia has started its monetary tightening cycle, and it is raising interest rates rather aggressively. So the RBA cash rate target is currently at 0.85%, and they have already hinted that it could reach 2.5% by year end. And if you look at the market is pricing in a rate of even higher than 2.5%. So higher interest rates or higher borrowing costs basically would be the next big challenge for the business sector, because they have implications across many different ways. For example, access to business loans or line of credit, ability to meet higher loan repayments, impact on budget or expenditure plans, impact on profit margin, ability to maintain existing operations, and ability to execute business expansion plans. So I've just given you a preview of my upcoming business conditions survey in terms of what my team is trying to gauge. So stay tuned for the survey and also for our findings in a month's time. I just want to remind everybody of the power of credit. People tend to underappreciate what credit really means. Credit actually helps people tap into opportunities, and that can have a multiplier impact on the economy. So it will be interesting to see how the recent rate hikes would impact on business activity, which will then have flow-on impact on the labour market. And again, as I said, stay tuned for our next survey. Okay, so after all the challenges, let's look at something more positive, opportunities. So this graph shows you the workforce participation rate. As I mentioned before, it captures people who are employed or actively looking for work. It has been trending up for both the national and New South Wales series. The plunges happened when the health situation was looking most uncertain due to COVID. So that was when people were perhaps understandably withdrawing from the labour market or stopped looking for work because of the health situation. But the series are otherwise trending up, as you can see on this slide, which is great from employers' perspective in terms of labour supply. Having said that, there is a huge gap between female and male participation rates. Even though the female participation rate has been gradually rising over the years, more efforts are clearly still needed to close this gap because the gap is still very wide. And this is particularly important as our nation currently experiences serious skill shortages. So how can we actually lift that green line up closer towards the purple line? I think that is going to be the next policy challenge. So from a policy perspective, what are some of the opportunities to tackle skill shortages? Well, the most immediate solution really is to increase workforce participation because you have all these people there with their skills, with their experience. You want them to actually return to the workforce and make a contribution there. And there's obviously scope to encourage retirees and women to enter or re-enter the workforce. And there's also scope for us to work with young disengaged people to increase workforce participation. Another way to deal with skill shortages is to focus on skills development. So we're not just focusing on providing education and training spots, but also making sure these education and training programs are relevant to the skills that are demanded out there in the industry. A third way to deal with skill shortages is to facilitate skilled migration. So that's a topic that Dave sort of touched on earlier. How can we bring in overseas talents to fill all these skills gaps within our economy? So apart from the skills migration front, I think it's good to see that the New South Wales government, when they handed down their budget yesterday, they've included a series of measures that focus on boosting workforce participation and also supporting skills development. Okay, so this is the final slide, and just bear with me for one more slide. I just want to also show you something a bit more positive as well. Looking at the New South Wales state budget released yesterday, there are several measures that do target some of the very pressing issues that we have covered. So first and foremost, workforce participation. The budget contains a number of initiatives that support women and families with children. And this includes assisting women enter or settle into non-traditional roles such as construction, and also supporting women entrepreneurs. And for families with children, the focus is on childcare, preschool, before and after school care, all of which would help to support their parents' return to the workforce and stay in the workforce. And on the skills front, there are extra supported training positions for in-demand jobs, especially in the healthcare sector, where demand for workers is likely to continue to rise in the years to come. And the TAFE training model will also be reviewed, which has the potential outcome of making courses more relevant, as I mentioned before, which is a way for us to not just improve our supply of skills, but also making sure that the output is relevant to the industry. And looking a bit further, The housing support and cost of living relief measures are also likely to help support working individuals as well in terms of their non-discretionary or essential spending. So hopefully that can also help contribute to a more engaged workforce. So that's all I